Everyone keeps saying PolyMarket is perfectly efficient, that the market prices everything in instantly, that you can't really find edge unless you have insider information. But that never really made sense to me, because if markets were perfectly efficient, nobody would consistently win. And yet, some traders clearly do. So I started wondering, what if the inefficiencies aren't obvious to humans, but obvious to AI? What if instead of guessing outcomes or following narratives, you just compare probability mathematically and let data tell you when something is mispriced? So today I'm not chasing hype trades, I'm not flexing wins, I'm literally putting AI against PolyMarket to see if it can detect real pricing inefficiencies in live markets. The idea is simple. Every polymarket price implies a probability. If something is trading at 70 cents, that implies a 70% chance. But implied probability and true probability aren't always the same thing, especially when emotion, headlines, or herd behavior distort pricing. So what I'm doing is taking live, high-volume markets and running them through the AI analyzer, which models probability independently from market price, and then comparing the two side by side. If the AI says something has a 62% chance, but the market is pricing it at 70%, that's not edge, that's overpricing. But if the AI says 62% and the market is pricing 55%, now we're looking at potential inefficiency. So let's start with a high volume political market, something with real liquidity, not some low cap meme trap. And immediately you'll notice the market implies, let's say, 68%, but the AI model is closer to 61%, which means retail might be slightly overconfident here. That doesn't mean you slam a trade instantly. It means you start asking better questions, because edge isn't about being aggressive, it's about being precise. Now let's check a different kind of market, something extreme, like a 95% or 96% probability event. And this is where beginners make mistakes, because they assume high probability equals free money. But when you run it through modeling, sometimes the true probability might be 97%, which means the 95% pricing is actually slightly cheap. And that's where disciplined capital allocation comes in. And what's interesting is that sometimes the AI completely agrees with the market, which is important because if AI always disagreed, that would actually be a red flag. The goal isn't to force trades, it's to filter them. Now let's look at something volatile, a breaking news type market, where you see price spike from 40 to 60 in minutes, and emotionally that feels like momentum. But when you model probability objectively, sometimes the shift isn't justified by underlying likelihood, it's justified by narrative pressure. That's where inefficiencies form, not because the crowd is dumb, but because the crowd is reactive. After running multiple markets through the analyzer, what stood out wasn't that AI magically predicts the future, it's that it consistently identifies where pricing deviates slightly from modeled probability. And those small deviations, when repeated over time with proper sizing, are where sustainable edge exists. This isn't about winning every trade, it's about making sure that when you do take a position, the math is in your favor, even slightly. And that's the shift. Instead of asking, do I think this will happen? You ask, is this priced correctly? Because PolyMarket isn't about guessing events, it's about trading probability, and probability can be modeled, stress tested, compared, and validated. So the real takeaway after testing this across multiple markets isn't that AI replaces thinking, it amplifies it. It removes emotional bias, it forces you to quantify edge, and it turns trading from reactive clicking into structured decision making. And if you approach markets this way, focusing only on high volume positions, comparing implied odds to modeled probability, avoiding emotional volatility traps, and sizing based on statistical confidence, you're no longer gambling, you're managing probability. That's the difference. Not hype, not flexing screenshots, just structured edge.